Welcome to Navkar Digital Institute, my dear friends. I welcome you all on behalf of Navkar Digital Institute, and we are starting off with a new chapter, and that is chapter number 12 from your paper number 5, and that is what we call it as advanced variances. Now, somewhere earlier you would have studied this chapter, might be in the name of standard costing. In the standard costing, we find variances only. And now in this chapter, they're going to be talking about advanced variances. But even when we look at the text of this particular chapter, when going down, they are also dividing this chapter in broadly two parts. One, just let me come over here on my notepad. They have divided this chapter into basic two parts. One is what they call it as revision of basic variances, that you might have studied in your earlier level. Revision of basic variances. And then comes advanced variances. So there are two parts to it: revision to basic variances and advanced variances. Ultimately, we're going to be doing standard costing, right? So for at least few sessions, we are now going to be looking at your book straight away, and we're going to be doing some examples. We'll be learning this entire chapter in our own way, with our own example, and once you all are comfortable, then and then only we're going to go into the study text and we'll read and we'll solve all the problems that are there in that particular text as well as in the test kit, right? So let me begin advanced variances chapter with this note. Let's begin. Now, first of all, before I commence, I want to give you a difference. Difference between two terms of costing. What are they? They are cost control and cost reduction. Now, before we get into the chapter of advanced variances, this is something very important to know. So, typically, what do we mean by cost control? So, if I simply try to write the definition of cost control, it goes this way. I'm going to be writing in simple words. I'm not going to be writing the exact definition word by word. I'm going to be just trying so that you can understand these things, right? So, cost control means to ensure actual cost adhere to standard cost. To ensure actual cost adhere to standard cost. Let me give an example. Say for example, I'll give you an example in terms of hours, but you'll be understanding definitely in terms of cost as well. But the way I'm forming the example is something very, very important. Now, if, say for example, I am told that you need to complete, Amit, you need to complete this chapter of advanced variances within 30 hours. You are given 30 hours. So now, there are two things into it. One is I'm given a standard, I'm given a budget, I'm given a target of how much? Of 30 hours. So there is a standard of 30 hours, and then to ensure actual cost adhere to standard cost. It means at the end I need to ensure that I complete this chapter within 30 hours. At the end, someone from the management side would be asking me, Amit, could you complete this chapter in 30 hours? If I say yes, it's okay, great, matter is over. But if I say no, then the reason needs to be investigated, that why this could not be completed in 30 hours, so the next year, this deviation, this variance doesn't occur. So here I give you example in terms of hours. Okay, I was given 30 hours and I should have completed within 30 hours. So when someone checks from the management side whether I've been able to complete or not, that is what we call it as cost control, to ensure actual cost adhere to standard cost, right? Then if we talk about cost reduction, it's all about achieving permanent and long-term reduction in cost. It's all about achieving permanent and long-term reduction in cost. I'll explain this point once I come to the next one, right? In cost control, we say that standard is not challenged and in cost reduction we say that standard is challenged. Now this is important to understand what do we mean when we say standard is not challenged. Now say for example, let's continue with the example that I just gave, that I was given 30 hours to complete this chapter of advanced variances. Cool? So 30 hours was the time that was given to me to complete this chapter of advanced variances. Now for any reason, I could not complete within 30 hours. I took 34 hours. Then at the end of chapter, when I'm meeting with the management that, okay, I took 34 hours, then what would be my reaction? Will I go and shout that management, you don't know this chapter cannot be completed in 30 hours, you guys are not aware about how teaching happens? Or scenario 2, I'll be accepting that, okay, it's my fault, maybe I would have given more breaks, maybe students might have taken more time, or maybe somewhere I was slow. Which one is the more probable? Of course, scenario 2. Scenario 2 is more probabilistic, and not probabilistic, it is that way only, and that's what we say that standard is not challenged. I'm accepting that, okay, it's my fault. I could not complete, maybe I was slow, maybe I was going late, maybe I would have given more breaks, maybe students were slow, maybe they were asking so many doubts, whatever. But it's my fault. I agree. I'm not arguing with the management that you don't know how this happens and you said 30 hours randomly, you don't know how to do it and all that. It never happens. As far as cost reduction is concerned, we are saying standard is challenged. Now let me just explain point 1 and 2 of cost reduction together. Now suppose that there is an exact opposite example for this. In cost control, in point 1 over here, what happened? I was given 30 hours time to complete this variance. I was told that you have to complete this chapter within 30 hours. So there was a standard which I need to adhere to. Understand my fact. Now, when I talk about cost reduction, first of all, understand this thing. I'm not given any standard. If my company is following cost reduction methodology, then what will happen? They'll tell me, okay, go and teach advanced variances to ACCA students. That's it. Listen to my words very carefully one more time. What I was told? I was told that go and teach ACCA students the chapter of advanced variances. Sentence complete. So if you're observing, I'm not given any fixed static standard of 30 hours. There's an open-ended way. Go and teach. Now, I started teaching. I was not given any target. I was teaching. And when the chapter came to an end, my dear, we realized that I had taken 84 hours for this advanced variance chapter. 84 hours. Oh my God. Then management, started coming into it, and they said, "Oh man, what are you doing? How can you take 84 hours? It's way beyond that. One should have taken this, that, and all." I said, "Sorry." Now management is telling me, in the next batch, try to reduce. Do not take 84 hours. Try to reduce. I said, "Okay." Now there are two things to understand over here. The moment I said okay, that I'll try to reduce, it means I am challenging my own standard. Of course, when I took 84 hours, I was teaching. You cannot come in the class and just sit idle or do time pass. No, that is at least what I don't do. I was teaching for continuous 84 hours. I was giving some of the other concepts. But now management is telling me in the next batch you got to reduce. And I said okay. It means I am challenging my own standard. Now, there's a strange thing over here is that at one point I am saying that standard is challenged, and now my point is, as such, when we talk about cost reduction, there is no standard at all. There is absolutely no standard. Now, what I'm actually talking about. See, what management told me after I took 84 hours to complete this chapter. After I took 84 hours, management told me, next batch try to reduce. Listen to this very, very carefully. Try to reduce in next batch. I was not given standard that next batch you should be taking 70 hours. You know why? Because the day management gives me a target that next batch 70 hours. Can you imagine what will happen? Again I repeat, scenario 1. Management told me, scenario 1, listen to me. Scenario 1, management told me, take lesser hours in the next batch. You cannot take 84 hours. Try to reduce your time. Scenario 1, this is what they told me. Try to reduce. Scenario 2. Management told me, man, you took 84 hours. It is totally irrational. Next batch you got to take 60 hours. Understanding what's the difference between these two? At one point, I'm saying that try to reduce. And at one point, I'm saying 60 hours. So when management tells me next batch 60 hours, understand, next batch 60 hours, next batch is cost control if management tells me that you need to complete in 60 hours. Because now I have got a standard and I need to adhere to that. So for cost reduction, what management must tell me? Try to reduce, and that is why it is reduction. In that way also understand this. So it's okay. I said okay. When management told me try to reduce, I said okay. And that means my standard is challenged. And second thing, okay, next batch came. Instead of 84, I took, say for example, 75 hours. Management told me, Amit, reduce more. I again said okay, standard is challenged. Now the very important point is, can third batch take more than 75 hours? Obviously no. If it cannot be reduced, it will be 75, but it cannot exceed 75, and that is what we are saying, achieving permanent and long-term reduction. Once you have come from 84 to 75, it's permanent and long-term. It's permanent and long-term. From 84 to 75 is permanent and long-term. Now future will be below 75, it cannot be above 75. And mind you, cost control is not permanent. What I mean is, it happens with us as well. Like this batch, I completed in 30 hours, cost control I am talking about. Next batch, There are different set of people, it is possible that we cannot complete in 30 hours, 1 hour here and then can go. So cost control is not permanent, but cost reduction is definitely permanent in long term, right? Third point, we say it has a visible end, and in cost control we say it has no visible end. It has a visible end and it has no visible end. What do we mean? When we say it has a visible end, means cost reduction can be forecasted. Okay, what I mean is, management had given me 30 hours, a batch completed. I was just going upstairs after taking the lecture, and management came, met me. The managing director of our institute, we just came across. And managing director sir asked me, Amit, I think today was the last lecture of ACCA when you should have completed advanced variances. 30 hours are done. Have you completed? I said, yes sir, I have completed. I just completed. Okay, superb. He is on his way, I am on my way. Matter is over. Cost control has a visible end. You should have taken 30 hours. Did you? Yes, I did. Matter is over. It has a visible end. In cost reduction, it has no visible end, because in this batch, I took 84 hours. Next batch, I'm going to be taking 75 hours. Again, management tells me, Amit, try to reduce further. Okay, I'll try to reduce further. Again reduce, again further. Now, when this procedure will end? After 3 batches, after 4 batches? I don't know. I really don't know. And that's why we say it has no visible end. The next point that we can write about is cost control talks about past and present. Again, I repeat, cost control talks about past and present. Why? See, how will we talk about cost control? You were given, past. You were given 30 hours. Have you completed? Yes, I am able to complete. Past and present. You were given 30 hours, target was given in past, and just now you achieved it. And here we talk about present and future. You have taken 84 hours, try to reduce in further batch, future, right? So it's present and future. And the last point of difference that we want to write over here is cost control is a preventive measure and cost control is a curative measure. Preventive and curative. Now, what is preventive and curative? Preventive means you are taking cautions before something happens. That is what we call it as prevention or preventive, right? Now, why cost control is called preventive? Because before I started the chapter, before I started the chapter, I was told that, okay, you need to complete this in 30 hours. So, every time I'll be having that thing in my mind that, okay, I need to complete in 30 hours. And my dear, even if I cannot complete in 30 hours, for sure I'll not be taking 84. I'm damn sure about this. So that is why preventive. Now, what will happen in case of cost reduction? I was just simply told okay, go and teach advanced variances to ACCA students. I took 84 hours, now what? Now they are taking corrective actions. Okay, you took so many hours and this, that and all. So that is a curative measure, right? Now having said that, when we talk about advanced variances, it's a method of cost control. So now, when we say cost control, you shouldn't be understanding in a language, okay, control your cost. No. When someone talks about cost control, you need to understand that we are talking about actual cost adhered to standard cost. Okay. Now, so if you typically understand cost control, there are three things that are coming into picture. One, actual cost. Adhere to standard cost. So actual cost, standard cost, and I need to take a difference of this two. Okay, what is the deviation? And that is what exactly we call it as our variance analysis or standard costing, or in this chapter we're going to be talking about advanced variances of variance analysis part, right? So for standard costing to take it, simply speaking, this is standard costing. The chapter is known as standard costing. Few are basic variances, few are advanced, and that's why the name of this chapter is advanced variances. But whenever, if I speak by habit, standard costing, you need to understand that I'm talking about this chapter only, right? So standard costing is nothing but this. So for, standard costing to be followed successfully, there are two things. One, there must be actual cost and there must be standard cost. So there are two things that must be there when, when we want to follow standard costing. One, there must be standard, and one, there must be actual cost, and then you should be able to compare it. Now, without standard, that is without budget, standard costing is of no use, it cannot be done, it cannot be calculated. Now what I mean is this. Say for example, I give you a simple example. If I tell you that in the next 2 hours, you got to do sums on your own. What did I say? I said for the next 2 hours, practice sums of advanced variances or practice sums of basic variances. That's it. That's what I told. Now, after 2 hours, I cannot check and start beating you up that why did you do this sum, why did you do this sum? Because what did I say? I only said for the next 2 hours, practice the sums of basic variances. I was not telling you which one to do or how many sums are to be done. It means there is no budget. We have understood in the chapter of budgetary control that for something to be called as a budget, it must be quantified. I was not quantifying. I was not saying that in the next 2 hours you got to do this 5 sums, 1, 2, 3, 4, 5. I was not telling that. So it cannot be compared, right? And if there is no budget, standard costing cannot come. Say for example, I come after 2 hours and I start checking with you guys how many sums you've done, why you do that, this, that and all. It doesn't make any sense. So for standard costing to take place, there must be budget. I got to be telling you that in the next 2 hours, do this 5 sums. Now I am quantifying 2 hours, 5 sums. There's a quantification. And when I quantify, at the end of 2 hours, I can come and check it out with you guys whether you have done the sums or not. So without budget, standard costing cannot come. So actually we are talking about the importance of standard cost. Without budget, you cannot follow standard costing. And the opposite end is, you have budget, you have standard, that okay, in the next 2 hours, I need to complete 5 sums. Agreed, super awesome. In the next 2 hours, I need to complete 5 sums. Superb. But what if I don't come after 2 hours? I've just gone home. I'm not coming back after 2 hours to check whether you've done, what have you done. No one is bothered about it. Then again, it will not, in fact, you guys are notorious enough. If you can, if you come to know that I have gone home, I am not on the premise, you will start leaving as well. So my purpose of standard costing, my purpose of control will not be achieved, right? So there must be both the things. There must be standard and there must be comparison with actual, then and then only it makes sense to follow standard costing, right? Now, having said that, I'm going to be doing standard costing or this variance analysis in just 2 simple ways. Very simple ways. I've got just 2 rules. If you can remember, if you can understand these 2 rules, it's all over. Job is done and dusted. What are those 2 rules? The first rule you need to understand is standard costing is an investigation, it's not an inquiry. It's an investigation, it's not an inquiry. Now, what is the difference between inquiry and investigation? You think about it. What is the difference between investigation and inquiry? Inquiry is not in depth, whereas in investigation, we try to go as deep as we can. Like when some death case or when some murders happen, there is an investigation. There is not inquiry. Okay, why did he die? Okay, he died from bullet. Okay, God bless him. May his soul rest in peace. It's not that way. That's inquiry. Investigation is we try to find out each and every fact. Okay, when it was murdered, why it happened, we try to recreate the scene, we try to find out who was the murderer. That is investigation. So first to understand, standard costing is an investigation, it's not an inquiry. What I mean by this? Actually, standard costing has ultimately one purpose. Only one purpose ultimately. And what is that? If I say that my profit for this year should have been 1 lakh. That is actually my standard profit. I wanted the profit of $1 lakh. But actual profit happened to be only $80,000. So my profit is $20,000 less. A stands for adverse variance. You of course you are aware about this. F stands for favorable and A stands for adverse variances. Adverse, not favorable, right? So my profit is 20,000 less than what it should have been. Now, what is the difference between an inquiry and investigation? If it would have been an inquiry, I would have inquired that okay, what should have been your profit? Someone said $1 lakh. What it actually is $80,000. Okay, $20,000. Next year, take care. God bless. Bye bye. See you. That's inquiry. What is investigation? Investigation is all about if my profit is 20,000 less than what it should have been, why? Why has, and there are two parts to it basically. Either your revenue would have changed or your cost would have changed. Either your revenue would have gone down or your cost would have gone up. If cost has gone up, why? We are not inquiring, we are investigating. So what we're going to say, if your cost has gone up, then why? So we'll again have further breakup. Has material cost gone up? Has labor cost gone up? Has variable overheads cost gone up? Or fixed variance overheads cost has gone up? See, understanding the difference of investigation between inquiry and investigation. If it would have been just an inquiry, we would have stopped over here. 20,000 adverse. That okay, my variance is 20,000 adverse. That's okay, we'll take care next year. But no, we are not inquiring, we are investigating. In investigation, we say this way, that what has changed, revenue or cost? Cost may which cost? Even, there are further breakups. If material has changed, then why? There is price variance and usage variance. You know this, so I'm writing it. Then again, usage gets bifurcated. That is what your institute is talking about. Advanced variances, which we are going to learn now. Same labor. We have got rate variance and efficiency variance. Same for VOS. So look how depth we are getting into. We are not just about that's okay, profit is different, it's okay, we'll take care next year. No, that's not what we are. Right? So that is the rule number one, that standard costing is not about inquiry, it's about investigation. And rule 2, I'm writing right now, you'll not be able to understand it. I'm going to be explaining it with a lot of examples, not one, two, a lot of examples. Rule 2, I'm saying, break up if possible, else give effect. Right? I'll explain this rule with the help of examples. So now what I'm doing is, I'm going to be covering each and every component. So my first component I want to take up is material variances. So let's focus on material variances, my friends. So let's start with material variances. Okay, so we are starting off with, as I said, material variances. Now let me give an example. See, one thing that I want to tell you is, let me give an example and then we'll move on to calculate all the variances. See, one thing I want to tell you is, though the study variance or the study material, maybe, dividing this chapter into two parts, that is basic variances and advanced variances. They've done it for everything. Like if we're talking about material variance, उन्होंने उनको दो पार्ट में डिवाइड किया है. एक हो जाएगा आपके लिए basic variances और एक आगे आ जाएगा advanced variances. Basic, advanced. That's how they have done it. But when we will be doing, what we're going to do is, we will be dividing, will not be as such dividing between basic and advanced. When I will do material variances, I'm going to be doing everything together. Be it basic or be it advanced. Everything will be done together. Right? So with this said, let's begin. Let me give an example. Let me form an example very first for the first. So I'm going to be preparing it in a tabular way. Say for example, there is one column for type, then there is one more column, and there is one more column. So we have got type, standard, and actual. Standard I am giving you for 1 unit of finished goods, and in actual I had produced 500 units of finished goods. Right, and again within that I am going to be having 3 columns: quantity, rate, amount, quantity, rate, amount. So we have got quantity, rate, amount, and quantity, rate, amount. So we have got quantity, rate, amount, quantity, rate, amount. Now let me give you data, right? Say for example, our company is using 2 kinds of material A and material B for producing this finished product. Now, whenever 1 unit gets produced, I require 2 kgs of A or 2 quantity of A at the rate 5, so price is going to be 10, and 3 quantity of B at the rate 10, and that is going to be 30. So 3 at the rate 10, and that will be 30. Now, for 500 units, what has actually happened is 1200 units of A was consumed at the rate 6, so that gives me 7200, and then 1400 kgs of B were consumed at the rate 11, so 1400 into 11 will give me 15,400. Now let's mark a total for this. So here we have got 5 and 40 and 2600 and 22,600. Now understand this, standard costing is actually very, very simple. Really, it's very, very simple. It's just about asking few logical questions and getting that answer. If you can ask logical questions, you can never do standard costing wrong. Trust me on this. So now let's ask the first logical question. My first logical question is, what should have been my material cost? Again, I repeat, my first logical question is, what should have been my material cost? Standard. So looking at the standard, someone answered me, sir, it is 40. I said, okay, super, great. What it actually is, 22,600. Oh my gosh, what nonsense are you talking about? Standard cost should have been 40. You ended up having 22,600. Oh my gosh, all of you are fired. Then someone stopped me. So wait, you are in the wrong direction. I said, what happened? So you are in the wrong direction because 40 rupees is the cost of 1 unit and 22,600 is the cost of 500 units. I said, okay, fair. I cannot compare 40 rupees with 22,600. So now what we need to do is we need to prepare a revised standard for 500 units, because 500 units cost and 500 units actual cost, they'll become comparable. Okay, so now let me prepare a revised standard for 500 units of finished goods. So we will say quantity, rate and amount. So now what I'm going to do is I'll just multiply standard of 1 unit with 500. Okay, what I mean is if 1 unit takes 2 kgs, 500 units will take how much? 500 units will take 1000 kgs. Price will remain 500. Please don't be mischievous. Usko bhi, don't multiply that also with 500. The price per kg is going to be 5 only. And that is 5000. 1500, 10, and you get 15,000. So we have got 2500 and 20,000. Now this will become comparable, right? So my first logical question would have been, okay, for 500 units, what should have been the total cost? What will you answer me if I ask you this logical question? Okay, for 500 units, what should have been your standard cost? Then answer is 20,000. What it actually happened to be? It happened to be 22,600. Oh my gosh, it's 2,600 higher, and that's why this adverse variance. Now let me calculate the first variance. So first variance, my dear friends, I am calculating is total material cost variance, wherein I'm going to say, okay, my cost should have been 20,000. It happened to be 22,600. So 2,600 more, that is on higher side, that is adverse variance. Now, keep following these 2 rules. Keep following 2 rules and you will be, simply doing everything right. Trust me, you can't do anything wrong. Awesome? Okay, now, what we are saying is, total material cost variance, 2,600 adverse. If it would have been an inquiry, again I repeat, if it would have been an inquiry, I would have stopped over here. But, so that is 26,000 adverse, 2,600 adverse. Now, keep following the 2 basic rules. First, I will explain. We are in the process of investigating. We are not in the process of inquiring. So what do we actually mean when we say we want to investigate? So when we say we want to investigate, what actually I'm trying to say is, if my cost is 2,600 on higher side, my cost is 2,600 more than what it should be, I don't want to stop over here. That's okay. 2,600 adverse, be careful next time. That is inquiry. I want to investigate why it is 2,600 adverse. Who is responsible? Let me know the reason. That is investigation. Now, my friends, as far as material variances are concerned, see, this amount is outcome of 2 things. What it is? It is quantity multiplied by rate, isn't it? That simple as that. So, there can be 2 reasons because of which this price variance, this total cost variance can go adverse. One, you purchased a wrong price. Your rate was wrong, and it actually is, as we can see. Instead of 5, we purchased at 6. Instead of 10, we purchased at 11. So we have paid higher prices. Now, basically, procurement is the job of purchase manager. And I want to investigate who has done this murder, who has murdered my profit to the extent of 2,600. And I came to know that there are 2 aspects of it. One is price. you might have purchased, you might have procured at a wrong price. That is the responsibility of purchase manager. Or also it is possible you might have used higher quantity. Now using is the responsibility of production manager. And for production manager, we're going to have a separate variance. So now let's try to find out by two variants. One is going to be for purchase manager and one is going to be for production manager. We'll try to find out who is the responsible guy. Okay, so let me call purchase manager. I called purchase manager. Mr. Purchase Manager, please be seated. We have got 2600 adverse variance. So now we are dealing with purchase manager. What is the job of purchase manager? Job of purchase manager is to purchase at right price. And for him, we're going to be calculating material price variance. So now let me calculate second variance. And that is material price variance. Now when we calculate material price variance, we're going to be asking about the prices, right? So what I say is this: for material A, what price it should have been purchased? It should have been purchased at the rate 5. You did purchase at the rate 6. It should have been purchased at the rate 5. You did purchase at the rate 6. And now you paid 1 rupee more. Now I want your inputs. You incurred 1 rupee loss. You paid 1 rupee more. That is obvious. It's visible. But this 1 rupee more is paid on which quantity? Matlab, I'm asking is, on which quantity did you suffer the loss? Did you suffer loss on 1000 or did you suffer on 1200? Then of course 1200, because we actually purchased 1200. I have paid 6 rupees for 1200 unit, and accordingly that is my loss. So 1200, and here it is 1200 adverse. Now for B, at what price it should have been purchased? It should have been purchased at the rate 10. You did purchase at the rate 11 into 14. So we get 1400 adverse and we get 2600 adverse. Now let me explain you rule number 2. Break up if possible or give effect. Break up if possible. So in this material cost variance, it came adverse and we are trying to break it up. Now second rule is break up if possible and not then give effect. Now total material cost variance break up if possible, because if total material cost variance is adverse, there can be two reasons. One is price variance and one can be you could have used more quantity. So now third variance I'm going to find is for quantity you might have used more. So we are saying material usage variance. Now, before we can calculate material usage variance, let me explain you rule number 2. Rule number 1. What is rule number 1? Rule number 1 says standard costing is an investigation and it's not an inquiry. What does rule number 2 say? Rule number 2 say break up if possible and if not then give effect. So when we calculated this variance adverse, we knew that break up if possible. Either it could be due to price or it can be due to quantity. Now when we have calculated a price variance, okay, agreed, you have paid 5 instead of 6. Sorry, you say you have paid 6 instead of 5. Now is there any further breakup possible? Why did you pay 6? No, you paid 6, it's a loss, so give effect. Now what do I mean by give effect? Now let me give you in form of story so that you can actually understand it. The story goes this way. So I was having a meeting with my purchase manager. I was on this side of table, purchase manager was on the other side of table. I told him, man, look, because of you I suffered loss of 2600. Do you have anything to say? But no, sir, I'm sorry. But no, sorry is something that we don't accept. We will deduct 2,600 from your salary. He said, sir, please, no, man, no. 2,600 will be deducted from your salary. He said, sir, please. I said, no. He said, okay. Now this is a story, because I want to explain you this funda of giving effect. Right? I want to explain you this funda of give effect. What do you mean by give effect? We actually mean, if I am deducting 2,600 from his salary, then what will happen? Can you tell me, if I recover 2,600 loss from his salary, what will be the repercussions of that? The repercussions are going to be, after I recover 2,600 from his salary, that is after I give effect of material price variance, now onwards, whatever number of variances I'll be calculating, listen to this very, very carefully. After I have calculated material price variance, after I have given effect, we say give effect, so after we have given effect, we have recovered 2,600, then the repercussions will be, after variance 2, that is after recovering 2,600 from him, my actual price is not 6, actually it is 5. And over here, after variance 2, actual price is not 11, it is 10. Actual price is not 11, it is 10. Because 1 rupee extra I have recovered from his salary. Now, say for example, I purchased this at 100 rupees as a company, but I recovered 20 rupees from my employee. So what is my actual cost? It is 80. Similarly, my manager purchased it at 11. I recovered 1 rupee from his salary. So what is my actual purchase price? It is 10. Right? So that is what exactly I mean by give effect. Now there are logical aspects of it, that is what I am explaining in the next variance. But for the time being, this much is enough, this much is sufficient for you, that you need to give effect. I hope you are understanding, right? So that is what my rules are. Break up if possible, and if not, then give effect. If not, then give effect. And we are giving effect, right? So we gave effect. We recovered 2,600 from his salary. And what is the effect of this? The effect of this is, now my price, my purchase price, my actual purchase price is 5 and not 6. So henceforth, whatever variance you calculate, whenever I ask multiplied by price, don't ask me, sir, which price, 5 or 6. There is only one price now in this sum, and that is 5. Please appreciate it. Okay? Now, with this, let's calculate material usage variance. So what do we mean by material usage variance? For two materials, A and B, we're going to be calculating usage. My usage, standard usage, should have been 1000 for A, but I used 1200. Multiplied by price. Now, the person who are not actually aware about the fundas of standard costing ask this kind of silly doubt, which price, actual or standard? My students know that there has to be always standard price, and now as such 6 has not any more relevance, right? So there is going to be 1000 adverse, and in case of B, 1500 should have been there, 1400 was purchased, multiplied by standard price 10, so it is 1000 favorable, and I am getting nil. Now there is one more logic. One logic I explained why in usage variance, I should be multiplying with standard quantity. One logic has been explained because we have given effect. Now, another logical reason, if you want to understand, let me explain you that with a story. I guess you love stories, right? Everyone loves stories. So let's have one more story. Now, I'm using this iPan. Can you see this? iPan, yeah? Can you see it? I'm using this iPan. Now, am I purchasing it? Obviously not. Even very genuinely, I even don't know from where they have purchased, at what price they have purchased. I'm least bothered with that. My job is, management is giving me this pen, take lecture, boom, my job is over. It's not absolutely my point from where they are buying, at what price they are buying or something. Now there's a big, now today is an unfortunate day for me. While I was doing this sum, something happened and this pen fell off. Oh my God, I broke it. I broke this iPan. And now management is holding me responsible. I broke iPad. I broke just now, it fell from my hand. I broke it. Now, management is holding me responsible. I am in front of management sitting on a chair. I'm like this. Management says, Amit, you broke this? Yes, my mistake, my fault. I take it. No, we do not accept it that way. The cost of this pen will be deducted from your salary. I say, sir, please don't do this, please, sir. Well, no. The cost of this pen will be deducted from your salary. You have broken it. You should have been careful. I said, okay, sir. Agree. I was agreeing that the cost of this pen should be deducted from my salary. Next month, when I received my salary, I found that 40,000 rupees was deducted from my salary. My gosh, oh my gosh, 40,000 rupees was deducted towards this iPan. I said, what crazy management are you? I've just broken one, not four. One. Management told, yeah, Amit, we know you have only broken one, and this is the purchase price of one only. I said, it's impossible. Don't fool me. I know. I've inquired in the market. The very day I broke it, I agreed to the management that this cost will be broken from my salary. I was shrewd enough. I went to an iStore, iPearl, and I checked what is the price of this, so that I can come to know what is going to get deducted from my salary. And I had found that 10,000 is the cost of it. Management says, Amit, we understand. You might have acquired. You might have checked with iStore. You might have checked online that this pen is available in 10,000 rupees, but we actually purchased it at 40,000. Here is the invoice. I said, sir, what is my fault? My fault is I broke this pen. Now, instead of 30,000, instead of 10,000, my purchase manager, Mr. X, purchased at 40,000 rupees. What is my fault? Why are you blaming me? And management said, yeah, man, you are right. Okay, we'll be deducting 10,000 from your salary. Standard cost. Same is the logic over here. Same is the logic over here. Okay, if I used 1200 instead of 1000, I agree, it's my fault. I broke it. I broke it. I agree. But if my purchase manager purchases at 8 or 10 or 6, it is not my fault. And that is the real investigation. My dear, that is real investigation. Real investigation is what? The person who is actually responsible should be taking the blame. Right? So that is what we mean by investigation. And when we look at this variance, there is a twist in the tail. When we look at this variances, we are feeling this way. Okay, my total material cost variance is 2600 adverse. Out of that, price manager has given me loss of 2600, and my usage variance is nil. So I'm getting a feeling that my production manager is awesome guy. Because of him, I didn't suffer any loss. My purchase manager is notorious. Because of him, I suffered loss. Okay, that is what the feeling we're getting right now. That my production manager is notorious. Sorry, my production manager is awesome guy. He is efficient guy, super cool guy. Because of which my company, didn't suffer more loss because his variance is nil. But there is twist in the tail. Again, my investigation has not come to an end. There could be something else. Again, let me give you a story. Ready for one more story? Okay. Listen to one more very interesting story. Now, there was a guy who wanted to gift gold earrings or gold ring to his girlfriend. He wanted to gift gold ring. So he went to a jeweler's shop and he told the jeweler, that show me some gold ring. My budget is, say for example, $200, right? So $200 was his budget. Jeweler showed him few designs and he told jeweler that okay, designs are cool, but make sure that it gets done under $200. Jeweler said okay, it won't go up, don't worry. So he liked the design. It was ordered, and 1 week later when he went to collect his order, it was ready, the gold ring was ready. Jeweler told him, boss, it's $100. You gave us budget of $200, we finished in $100 only. My gosh, that's awesome. $100, superb. He gifted this ring to his girlfriend. So he gifted this gold ring to his girlfriend, and 1 week later he got broke up. Oh my God, break up? Yeah, break up. Why? Because this ring was made of 90% silver and there was just 10% gold plating. It was not gold ring, it was gold plated. Oh my gosh. Is it? Yep. Now, the story is like this. Okay, if my usage variance is favorable, it doesn't mean my production manager is awesome guy. He might have done some mischievous task like this. He would have changed the mix. Where gold should have used, he would have used silver. Oh my God, that's possible. So he might have changed the mix. Okay? And hence, we are not stopping over here. We are investigators. If variance is nil, we do not say that's okay, fair, let's stop it over here. No, that's not what we are. What we are actually saying is, okay, fair. Even if material usage variance is nil, I want to calculate next variance, and that is material mix variance. I want to check. He has not changed the mix now, that is what I really want to check. If he has changed the mix, he is not the guy that I would prefer. So in material mix variance, what actually we are going to do is, we will ask the manager, okay, boss, okay, what quantity did you actually use? You are telling your variance is nil, okay, agreed, but just tell me what quantity was actually used. We said it's a 2600. We said, okay, fair, good, no issues. 2600 used, perfectly all right, absolutely fine, no issues. But 2600 should have been used in this ratio, 2:3. You shouldn't have changed the mix, because changing mix affects the quality as well, right? So now we want to calculate the standard mix for actual usage. And please mind it, we have to look at actual quantity, actual usage, not the standard usage of 2500. We got to be using actual quantity, that whatever actual quantity you have used, we are fine, but it should have been in standard quantity. Agreed? Okay, let's see this now. So, first of all, we are trying to calculate standard mix for actual usage. Standard mix for actual usage. In that, A and B. 2600 was used, 2600 was used into 2/5 into 3/5. So 2600 into 2/5. You should have used 1040 and 2600 into 3/5. You should have used 1560. And now let's calculate variances. In that, now we will say, in standard mix, I should have used 1040 quantities of A and 1560 quantities of B. And how much did I actually use? 1200 and 1400. So 1200 and 1400 multiplied by standard price 5 and 10. So 1040 minus 1200 into 5. This is 800 Edwards. And here we get 1560 minus 1400 into 10. So I should have got 1600 favorable. And here I am getting 800 favorable. And mind you, this is very, very important. Mixed variance is the only variance which is not good if it is favorable. Oh my gosh, that's strange, but that's a fact. Having a mixed variance favorable is something that I would not prefer, because see, this means that mixed variance favorable means I've used more of a cheaper material and less of a costlier material, because here the total is same both ways, 2600 and 2600. If total remains same and still the variance is favorable, it means more of cheaper material has been used and less of costlier material. More of cheaper material and less of costlier. And you can see over here, the material which is costing me rupees 10 has been used on lesser side, and the material which was costing me rupees 5, the cheaper material, has been used on the higher side. Right? And that's how I got 800 favorable. Actually, that's not good. But anyway, we have calculated the variance. Now, keep following those two basic rules that we've understood. Investigation, and second, break up if possible, and if not, then give effect. See, we have been doing this sum on those two rules only. Break up if possible, and if not, then give effect. Now what we mean by breakup if possible? Again, let me explain you, this is very great. 2600 adverse, breakup possible, yes. Price and usage. Price variance, breakup possible, no. Give effect. Give effect. Usage variance, breakup possible, yes. So understand this. After calculated usage variance, I didn't change anything in table because there was breakup possible, mix. Now, mix has been changed. Breakup possible? No. There is no further breakup possible for mix. And now it's time to give effect. So what do we mean actually when we say give effect? When we say give effect, we actually mean, okay, now after fourth variance has been calculated, 1200 and 1400 doesn't remain with me. Actually, it will become 1040 and 1560. That's how I'll be getting 20. That is what I mean by give effect, right? Because you cannot punish your manager for one mistake again and again, right? And now let us calculate the final and actual variance, and that is what we call it as material yield variance. Now, why do we need to, okay, chalo, let me calculate yield variance and you will understand this automatically. So next we have material yield variance. So let's calculate yield variance now. In case of yield variance, we will say what quantity of A should have been used. Now we come to actual. What quantity of A should have been used? It's 1000 and 1500. Now next question is very, very important. Very, very important. When I say what quantity should have been used, it's okay. The answer is 1000 and 1500. But when someone tells what is the actual quantity used, what has been actually used, do not, please listen, do not tell me 1200 and 1400 because that's no longer there in the table. When someone asks you what has been actually used, you need to answer me 1040, sir, and 1560, sir. Okay? That is what you need to answer, my dear. 1040 and 1560 because we have given effect. And multiplied by standard price, that is going to be 5 and 10. So 1000 minus 1040 into 5 will give me 200 adverse, and here actually it is going to be 60 into 10, so that will be 600 adverse, and here we get 800 adverse. So now we are coming to know that my purchase manager is not actually efficient. He is not efficient. My production manager, he is not actually efficient. He has done mischievous task. So and that's where, my dear, comes the usage of actual this variances. Earlier you were getting a feel that your production manager is an cool guy, no profit, no loss guy. But now what you're getting? Now you're realizing that no. He has, because of him, I have suffered loss of 800 rupees, and that's fact. Now why this variance come nil? Because the moment he would have realized that I'm using more quantity, what he smartly did was he started using more of cheaper material and less of costlier material. Let me repeat. He started using more of cheaper material and less of costlier material, and effectively brought his variance nil. But he was not knowing that we are investigator. We will, dig the grave and we'll find everything that is there, and we have actually found it out. Look over here, right? So I'm going to be writing two checks now. One check is over here, the breakup of 2600 adverse is equal to 2600 adverse plus nil, and now this breakup nil is equal to 800 favorable plus 800 adverse. Now someone might want formula, so give us formulas. That's okay. Now I start giving the formula to you. So now let's start writing the formula. 20,000 is what? 20,000 is my standard material cost minus, we will say, actual material cost. So standard material cost minus actual material cost, that's how you get the formula of total material cost variance. Then over here we're going to be saying standard price minus actual price into actual quantity. That's what we get, the formula of price variance, standard price minus actual price into actual quantity. Then over here we're going to get standard quantity minus actual quantity into standard price. Okay. Then यहाँ तो हमने we have written already standard mix for actual usage, and now let's find the variance over here. So here we're going to get the formula standard mix for actual usage minus actual mix for actual usage multiplied by standard price. And over here we're going to say standard quantity minus actual quantity in standard mix into standard price. Good. So that's how we are understanding material variances. Now we're going to go to the next component of our cost, and that is labor cost variance. So let us calculate labor cost variances now. So now I am calculating labor variances. Now, in case of labor variances, now again let me give you an example like I gave earlier, and then we will be solving this question. So let me give you an example now. So first column I will have is for type, then one column for standard, and one column I'm going to keep for actual, right? So first column we have type, okay. Then we have got standard. If required, I'll use the middle column, otherwise that's okay. And here I'm going to put my actual quantity, right? Or rather actual, बस नहीं लिखते. Now standard is for one unit of finished goods. Actual unit produced by me during the period was, now let's say for example, I keep it 1,000, right? I'm trying to change some numbers. it is 1000 units of finished goods, and then quantity, rate, amount, we will say quantity, rate and amount. So quantity, rather for labor, rather than using the word quantity, I will be using the word hours. So hours, rate and amount. Now suppose that there are two types of workers working in my factory. One is skilled and second is unskilled. Now I know that whenever 1 unit of finished goods gets produced, my skilled work has to work for 5 hours, and they are paid at the rate 10, so it cost me rupees 50. And my unskilled worker has to work at the rate 3, and I pay them at the rate 5, so 15 is what my labor cost is. Now if I try to give actual, actual was just a second guys, 6,000 units, 6,000 hours